everybody, and welcome to the Open eCry market commentary for the week of August 19th. My name is Toby Gennaro from Trade with Precision, and we'll just be talking through what's on tap for the markets this week. So let's take a look here at the big cap stocks on the ES futures contract and just work our way down from some of the higher time frames here. The monthly chart really doesn't tell us a whole lot here. Right in the middle of the month of August, we did put in a higher high there for the month of August, but we just had this fairly big pullback here, looking like it's going to be a pullback on the weekly chart, and we came right down through that 670 level without a lot of resistance there at all, and ended up right down here around the 1648, 1649 level, which, as we can start to see on the daily chart, had a number of touches in through there at 1649. There's some support there right around 1670, which had been resistance for a while, and support all the way back through here. And then the next level down is going to be the 1629, 1630 level, which goes back quite a ways there. So we've got a number of touches in through there. The significance about 1630 is that is a 50% retracement between the swing low right here and the swing high right here. So a lot of these pullbacks will come back and hit that 50% level, and you can see we've had a number of touches there. It's also a nice support level as well, so that could be a very reasonable place for a solid market bounce. For right now, we are seeing quite a bit of divergence on the charts as we move down to some of the intermediate time frames. So it looks like we're going to be getting a little bit of a bounce here, but as you can see, the moving averages all in alignment to the downside on the 240, the 120 and lower. And as you can see, also we got really just a major drop in the market last week, and then really just a dead cat bounce right here. And you can see the market moving averages actually catching up to the price, and the price just really just doing that dead bounce at the bottom. But what we do have is we do have some divergence setting up here on the 120, setting up pretty nicely on the 60. Then we also have some nice divergence here all the way down to the 15, which would include the 30-minute chart as well. So not really sure how far this bounce will be, but more than likely at some of these different levels, it's going to be met with some selling pressure. It could be up around this 61 level, the 50% retracement level of this move lower from here, basically from here to here. The 50% retracement would be right around the 1670 level, 1671. And then the 62% retracement would be right up around that more solid level, right around 1676. So at some point, the market's going to get into a rally here, and just keep some of these levels in mind. The 1676 is a pretty solid level. 1670 doesn't have a whole lot to back it up, with the exception of the 50% retracement. But in any event, it looks like we'll be getting some kind of a bounce here, and then I'd be looking for the market really to turn lower here based on what the higher time frames are telling us. So I'd probably be looking for something maybe even as low as the 1630 level, which would be a nice 50% retracement. 1630 would put us, really right around that 20-period moving average. So it'd be a significant pullback on the weekly chart, and then basically we just want to start looking for that setup candle on the weekly chart. And so things aren't looking too good for the markets here in the coming week. As you can see, most of the pullbacks on the daily chart have been down to the 50 period moving average and below. And so we've had these moves lower where the market rolls over. We get into a short-term downtrend with lower highs and lower lows, and then obviously we move back up, and you can see that happening for not only happened there, but happened a number of times here, happened back here as well. Had a series of lower highs and lower lows, and what those are signifying are just pullbacks on the weekly chart. So nothing to be alarmed about. This is certainly normal market action. We're just trying to find out where the pullback is going to be, and when we have the ability to get long again this market, so that we'll have the opportunity to get long again going with the higher time frame. So it looks like it's going to be happening here on the weekly chart, and we had that nice setup candle on the last pullback on the weekly chart. If we can get the same thing again here up against some kind of a position, there might be an opportunity right there, like I say, around that 630 level. Other than that, we might be coming down a little bit lower. 1594 is still quite a ways away, but the 62% level is going to be right in around that that 1612 level. Let me put in Fibonacci retracement there. And so, yeah, that the 62% level is going to be coming in right around that 1612 level. And then you can see the 1630 overlaps really nicely with the 50% level. So those are really some of the things we're looking at here. The market's never going to go down in a straight line, so we are going to get some bounces in here. And so keep an eye out for that 1670 level up through about 1676. And if we do get a rally here in the markets, we should see some selling pressure coming into play right around those levels. And we'll just take another look at the small cap index here on the Russell 2000 and see if that differs any from what we're seeing on the big cap stocks with the ES. So we'll use the Russell contract to do that. Very same thing here, a lot of overextension on the monthly chart. Long time going back all the way to the end of last year, 2012, to get a pullback into the moving averages. Haven't seen one since then. However, on the weekly chart, you can see all the nice pullbacks we've had right back into the moving averages. Nice setup candles and then moving back up to new highs. So it looks like we're getting that here. We're currently sitting right around that 1020 level, and there's really nothing stopping the market from coming all the way back down to retest this 1000 level. As you can see here, we had a number of weeks, 1, 2, 3, 4, 5, 6, 7, almost 7, 8 weeks of flirting with that 1000 level. Finally, we got a breakout of that level, and now this would be, if it comes down that far, this will be the first test of that level, the retest. And normally then that level of resistance then would become support for the next move higher. And so if we put in a Fibonacci retracement from that swing low right here to the most recent swing high, and here it is on the daily chart, the Fibonacci retracement right there to the most recent high, then the pullback level would be at the 50% level. It would be right dead at 1000. So you can see all of the support in the duration there for that level. As we look at the 480 chart, you can see we have another level in here right around 1035, 1036. And if we do a Fibonacci retracement of the most recent high to the most recent low, then we can see that 50% retracement level would be right back around the 1037 level, which is pretty close cluster with that 1036, 1035 level. And if you go down to some of the lower time frames, the reason I think we might get a bounce right back up into this level this week is simply because there's a lot of divergence in some of the intermediate time frames. So moving from where we currently are now right back into the moving averages, along with the 50% retracement, and then the moving average more than likely would be met with a lot of selling pressure right there, and we'd be taking the market lower again, possibly for the next move down to that 1000 level. If we take a look at some of those intermediate time frames, nothing really on the 240. We've got all the moving averages rolled over in alignment, going to the downside. But then when you start to look at the 120, you can see we have this, with this new lower low right here, we actually have a higher low in both the MACD and the RSI. Same thing here on the 60-minute chart, and then even on the 15-minute chart, you have a couple of divergence bumps here, and you actually have a double bottom, bottoming structure in right there. So if we get a break of the high of that 1022 level, we could be moving back up to 1025, 1029. If we end up getting a break of the 1029 level, more than likely we might see a pullback all the way or rally back into that 1035, 1036 level. So we'll just have to see what the markets have on tap for it this week, but that's kind of what some of the levels are looking like. So some of those levels to join this short trend would be looking at potentially a 1035, 1036 level, and then looking for that setup candle in there, and looking for the time frames below the 480 to do that. And that would basically be the trend flow strategy. On the long side, we're looking for the pullback here on the weekly chart, going with the upward trend on all these higher time frames, and then we're going to be looking for these similar bullish candles setting up between that 10-20 period moving average, and then looking for the break of the high of those setup candles to then look for the market to move higher at that point. And then we'll take a look at one foreign currency pairing here, looking at the pound yen. As you can see, we just got a slight upturn in the moving averages here on the monthly chart. Everything's looking good. We don't have a lot of extension away from the moving averages on the monthly. We just have really kind of a sideways consolidation here for a couple of months. And you can see on the weekly charts the pullback into the buy zone here, then really kind of a sideways consolidation. Just had a nice bullish candle there. Had a couple of bullish and some indecisive candles back here. Broke the high of those, but really came down. But we still didn't break the swing low of that level right around 147. So we established another bullish candle right here. If we get a break at the high of that level, we get an exact level for that. The high there would be 153.22. Get a break at the high of that level, and then more than likely we're going to get a break at the high of that level at 154. Could put us back up at some new highs right there. So be keeping an eye out on the weekly chart. As you can see on the daily chart, there's a longer example here of that consolidation. We can see basically a number of touches here setting up, potentially a flat level right here, that sideways consolidation. If we get a move back up into this 154 level, you might see some smaller candles beginning to consolidate right at that 154 level. That'll tell us that we might have a momentum breakout setting up to go long. Convergence on the indicators looks good for that setup. Looking at the 480 chart, we can see that we've got the 50, the 20, and the 10 getting into alignment. We've got a higher high listed right here, and we've got some bullish candles right in and around that 10-period moving average here. If we can get a break of that level again, right around that 154 level, 153 level, we can probably see a move higher back into at least the most recent highs and possibly beyond. So things looking like there's some bullish opportunity there on the pound yen. So there's the outlook for the markets this week. We'd like to thank you all for watching the Open eCry market commentary for the week of August 19th, and we look forward to speaking to you next week on the market update.